Hi everyone, and welcome to today's morning report with me, Richard Perry, market analyst at Handtech Markets for Wednesday, the 23rd of July. The European markets have actually opened slightly lower and have actually rallied fairly reasonably in the early European trading. And the slight decline just came on the back of a little bit of a reversal of sentiment from yesterday overnight. Some a little bit of profit taking that we saw from the yesterday's gains, and also the potential for sanctions to be announced on Russia as well. It's just taking a little bit of shine off the rally that we'd seen. But certainly, there seems to still be a bit of an appetite for buying into these equity dips. So just keep that at the forefront of your trading, I think, today. The S&P 500 on Wall Street had another all-time high on the intraday chart. Didn't quite make it into the close. Didn't quite make a clean break, but certainly there was a poke to a new all-time high there. Asian markets were mixed, and as I said, the European markets are just actually slightly positive in early trading now. The only real bit of data that we saw overnight was the Australian CPI. Inflation there jumping at the highest since Q4 2011 at 3%. That's given the Aussie dollar a bit of a boost in the trading overnight. So a strong reaction there. In terms of Forex trading generally, the dollar index has performed fairly strongly in the last couple of days, taking a slight breather there, but certainly that you can see here on this chart that it's challenging the high that it saw on the 10th of June of 80.82. So it's not far from that high there, and if it breaks out through there, you'd see that it opens the way to 81.3, which is that key level, which is actually a key pivot level on quite a long historical basis there. So 81.3 is where we could go to on that chart. In terms of the economic data today, the main event probably is this Bank of England meeting minutes announcement that comes out at 9:30. There's no real expectation of any movement on the voting stats. However, there is a slight upside risk of possible dissension and possible voting for rate hikes, considering we've had positive news recently on unemployment and also increasing inflation for the UK there. So there is a possibility of an upside risk, but more than likely, due to the fact that we've got a quarterly inflation report by the Bank of England on the 13th of August, and that would be when the Bank of England just reassesses its quarterly targets, and this is more likely to be when you're going to see a change of outlook for the MPC. So just keep that in mind today. Also, you've got the Eurozone consumer confidence at 3 o'clock, down 7.5%, which is sorry, down 7.5. It's not percent. Is the expectation there on that number, but also this evening at 10 o'clock UK time, you've got the Reserve Bank of New Zealand that's expected to hike rates by a further 25 basis points to 3.5%. So there could be a bit of action on the Kiwi dollar today in light of that. So that's one to watch. In terms of my chart of the day, an interesting move that we'd seen in the dollar Swiss. Dollar Swiss has been an interesting chart purely for the fact that the Swissy and the euro have been both moving in the similar direction. Obviously, dollar Swiss is the opposite in terms of dollar being the base currency here, but sorry, the Swissy being the base currency here. So that means that when this dollar Swiss goes up, that is dollar strength. And what we're seeing here is this dollar getting stronger against the Swissy, breaking out above the reaction high from the middle of June, 90.13. There was the reaction high, but now this reaction, this sharp spike of a day that we saw on the 5th of June. That 5th of June date was the day that the ECB announced monetary easing. A lot of action going on in the currency markets on that day, and certainly the euro moving a lot, and the Swissy, as I said, tends to move in line with the euro, so lots of movement there, and it's now challenging that 90.36 reaction high that we saw on the Swissy on that day, and it's not far from that, just 10 figures away from that there. So interesting that that's being challenged. The euro has already broken its equivalent level of that. ECB meeting day, so it looks like the Swissy is being led by this euro, and certainly there is upside potential on this chart. The momentum indicator is very strong. MACD lines have only just really turned positive again, so lots of upside momentum still potentially on there. Also, the RSI at 66 tends to get or certainly in the recent rally, got towards that 70 mark, so there is also upside potential there, and stochastics are in positive configuration as well. In terms of moving averages, we've got nice configuration on the moving averages, all turning up in bullish sequence, so pretty much across the board very strong on the technicals there, and we'll see on the this is on the hourly chart, a very positive configuration here on all the momentum indicators. MACD lines consistently hitting that neutral point and pulling higher, so what we've seen is a bit of a stepped move to the upside, and the latest support you'd certainly be saying is around that 90 89 90 to 90 big figure mark. The two supports there you could start to use, and on a very near term basis it seems to be finding support around 90.15 as well, so it looks like it's in the past hour it's already broken out to a new multi-day high, so on the intraday chart it's pushing towards that 5th of June high of 90.36 seems to be the test that it's going to see today. Very strong there on the Swissy, so you'd be looking to buy, I would say buy this into a correction. Ideally probably around 90 big figure, but anything back towards that 90 big figure, down towards maybe even 89.70, 89.60 even, so there's still lots of room that you could see a correction into that would still be a decent buying opportunity here on the Swissy. So I wish you good luck in your trading on the dollar Swiss today, and I will speak to you later. Thank you.